We're both getting started, and that's what's cool is here we are both partners on a 160 unit multifamily deal that our partnership just acquired. $19.5 million purchase price on seller finance. So
Hello, I'm here with Pace Morby, world-class entrepreneur, investor in real estate.
I'm just warming up, just like you, bro. We're both warming up.
As he said, he's just getting started, so.
We're both getting started, and that's what's cool is here we are both partners on a 160 unit multifamily deal that our partnership just acquired. $19.5 million purchase price on seller finance. So showing you how to do creative finance.
Definitely.
This is a pretty cool, amazing property. So we're both just warming up, all right? One day we're gonna be like, this is our 1,000 unit seller finance deal. We're not there yet. We got big goals. Hopefully you guys do too.
Yes, very big goals. And on that note, why seller finance? Why real estate?
Okay, so seller finance, what was great for the seller is the seller on this particular property down here in Tucson, Arizona. He had owned the property for almost 40 years. He actually built the property, owned it, sucked out all the cash flow over those 40 years, lived his lifestyle, quit his job, quit being a developer, and said, man, this one property spits out enough cash flow. I could just live on it.
Yeah.
Okay, well, what happens is then his expenses go up because his income went up, and now his income and his expenses started to match. It's called lifestyle creep. So the seller making all the cash flow from this property all those 40 years, his lifestyle started creeping up to the point where he never had extra money to improve the property. And so after 30 years of not improving the property, it got to a point where it was time to improve the property. But he found out, oh man, this is going to cost $3 million for me to improve the property, raise the rents. You know what I'd rather do is I'd rather just retire and seller finance this to somebody because it could help me mitigate or stretch out my capital gains tax on this property I've made a ton of money on.
Yeah.
So he decided seller financing to us was not only better to get the purchase price he wanted, he also didn't have to renovate the property to sell it to us. And thirdly, probably most importantly, it helped him avoid a lot of his capital gains tax by selling to us over a long period of time and just taking payments. That's why it was benefiting the seller. For us, why would I ever want to go to a bank if I didn't have to? No credit check, no credentials, no W-2, taking 6 months to close. They take 6 days to close escrow on an asset like this. It's pretty cool.
Yes, I'm so glad that he mentioned the capital gains. As you kind of mentioned, both the buyer and the seller both benefiting for taxes.
Yeah.
So on this unit, you talked about the improvements. What's the kind of expectations for just the tax benefits with all the improvements and everything that you guys have planned?
Okay, so the first financial benefit for owning a property like this, partner, is that the property's worth $20 million today. Okay, so what's great is that we get to go to the IRS and say, hey, IRS, we're going to take this magical gift that you're giving us called depreciation. In fact, we're going to go do a cost segregation. So we're going to go hire an engineering firm, spend about $900 to $3,000 for the engineering firm to come into the property, create a report and say, these are all the things that need to be fixed. And with that report, we can go and probably get about an $8 million tax benefit through a cost segregation. And all of our investors, all of our partners in this deal all get to utilize that to wipe out other active income in their lives. So the seller gets massive tax benefits. We get massive tax benefits as the owners through something called cost segregation.
Yes, exactly. And I'm so glad that was a great explanation. Nice way to just simplify it for the average person.
Right.
And what I want to add to that is real estate itself, it's leveraging debt in order to get a tax benefit.
Yeah.
Unlike most businesses, when you spend money, it's like a dollar for dollar deduction. Whereas with real estate, you put the money down, now you're able to leverage it and maximize your active income.
Yeah. On this property, right? So a $20 million purchase price, we put about $5 million down and we'll end up getting about a $9 or $10 million tax benefit. So we got $2 for every dollar that was invested. So again, if I go buy a car right now, right? And I go buy a car cash, like a Ford F-150 that's over 6,000 pounds. And that car cost me $75,000 in cash. I get a $75,000 tax deduction, right? From my income. That's a dollar for dollar.
Correct.
Whereas multifamily real estate is like $2 or $3 in tax benefit for every dollar I invested into the deal. It's the greatest leverage of all time.
Yeah, definitely.
You want to know how to make more money? Keep more of your money. Use an amazing tax professional that understands how to do this stuff. Guys, I'm telling you, the worst thing that most people are doing right now is they're paying 25, 35, 43% of their income goes back to Uncle Uncle Sam, does Uncle Sam manage their money properly?
No, never.
No. So why would you give it to Uncle Sam? This is why you hire a professional to handle those things for you. It's the greatest dollar I've ever spent was hire a tax professional to keep my money from going into Uncle Sam's pocket.
Yeah. And I wanted to ask you on the exit strategy here. I know you kind of mentioned capital gains.
Yeah.
Do you typically do 1031 exchanges, or typically how do you kind of exit?
There's two ways that we would exit this deal, okay? Way number one, we would do a refinance, depending on what happens. Let's say in 3 years, the property's completely renovated. We've raised all the rents. In 3 years, let's say rates are 3%. You know what we're going to do as an investment group? We're going to refinance into a new loan, pull out all of our investors' capital, because that's not income.
Yeah.
That's debt. We're getting a new loan. We're getting that debt, and we're distributing that money back to our investors so they're made whole, and then keeping them in the deal even after they have no money invested through a refinance.
Yeah.
But let's say in 3 years, the interest rates are 9%. Well, I'm obviously not going to refinance into a 9% loan. You know what I am going to do? I will take this asset as an investment group. I will sell this asset to an investment fund or a REIT. So let's say that we sell this property for $27 million, hypothetically. Our investment group gets a $7.5 million return. Well, we don't want to pay taxes on that.
Yeah.
So we would suggest our investors take the return, their initial investment, and 1031 into another property that we would have lined up at that time.
Yeah. Wow. That's amazing. And I think also heard you talk about just kind of how, like, as you kind of grew your investments, you had to kind of look for different CPA advisors.
Oh my
that
gosh.
fit kind of give us more details into that.
Rule number one, if you are hiring a CPA or a tax advisor, never hire one that does not own their own type of real estate that you want to own. I see a lot of CPAs or tax advisors that will give really bad advice based on the fact that they've never invested into the asset class that you as an investor are trying to invest in. So how can you expect them to give you good advice when they themselves have not invested in that asset class?
Correct.
So I've had to upgrade my CPAs over the years 7 different times.
Wow.
I wish I just knew what I knew now. I would have just hired the right person and not have to go through the wrong people, but thus is life.
I like that you say that, because like it's a different mindset when you're interested in something and you're actively trying to invest your own money into it.
Yeah.
So that when I graduated college, I thought just being a CPA would teach me everything about building wealth. It taught me absolutely nothing. Everything I learned in terms of tax strategies, I had to go out and learn on my own, because unfortunately the CPA firm I was working at didn't prepare me enough.
Right. They're more box checkers rather than box creators. And the cool thing is you created a box.
Yep.
You know how to create boxes. That's what entrepreneurs do. We create. The wrong tax advisors are just checking a box for you. The right tax advisors are out there creating their own boxes so they can give you advice, not just from the tax perspective, but also investment advice, because he is an investor on a 160 unit multifamily deal.
Yeah.
That's the kind of person you want to have as your tax advisor.
Correct. Yeah. And another thing, just to kind of add here, us as partners, let's say you don't have the time to actually invest yourself. That's why you typically find a fund like that we're in together here, where you can still get those tax benefits and really just benefit from real estate.
Yeah, you get the appreciation as a partner, even though you didn't have to find the deal, manage the deal with anything here.
Yeah.
You get the cash flow, you get the tax benefits, and you get the potential exit profit. So you make all of that money by being an investor in a fund that he's running, while you continue to run your doctor practice, maybe your own tax business, or you're a fireman, right? Like we have people, firemen, traveling nurses, we have every type of person. We have a lot of plumbers that have actually invested in this deal. It doesn't matter who you are. If you're a busy professional and you don't have time to find real estate deals, you invest your money into people who do.
Yeah, exactly. All right. This is me just being curious at this point.
Yeah.
I've heard different situations. Fund managers would do special allocations for things like depreciation specifically to them. Is that something that you typically do with the funds that you have at all, or is that straight depreciation for all the investors?
Ours is just straight depreciation for pro rata based on what you've invested.
Yeah.
However, I have done deals where, actually I just did a deal with Angela Wayne right here, one of our other partners. She had a big tax liability of like $850,000. And she said, I need depreciation on an asset, but I don't have a lot of cash to invest. And I go, okay, well, I've got a deal in Birmingham, Alabama that I need. It's a $10 million purchase. I need $1.5 million for. If you bring me the 15% of the deal, I'll give you 100% of the depreciation. That will save you $850,000 in taxes.
Yeah.
So you can do special allocation where one investor can get all of the depreciation, which is what I did with Angela Wayne. Yes, I do that.
Yeah.
But it's not very common. It's very rare, actually.
Wow. Okay. I'm actually really surprised with the amount of tax knowledge that he has. So want to just say great job on this talk here.
That's what happens when you get a good advisor, guys. Boom, boom, boom.
Well, appreciate your time.
Thank you, bro. Thank you.